Hi, I'm Patrick Reid from the Adamis Principle, and I've got some of my best charts for you today. So the first chart, looking at the money markets, this is starting to cause a few raised eyebrows. Some time ago, and I've certainly been blogging this on LinkedIn, some time ago, there was the spreads widening from LIBOR to OIS was causing a perceived credit stress. The subsequent highly telegraphed cause for this was obviously bond issuance, short-term paper, and a bit of repatriation from offshore dollars into the US. Now things are slightly different. I just think the 3-month dollar LIBOR is clearly higher. I think the spread's probably around 20 basis points now. Not a horror show, but this coupled with the next slide, if you see the cross-currency basis swaps, this is negative. So what happens here is both of these together is going to cause a bit of concern on money markets. This basically means that all EM are spending more to fund their deficits, basically, because obviously as the reserve currency, the dollar is the funder. It funds and they're funding their deficits. Not quite a horror show, however, it could be the makings of a late Halloween party. So, moving on to the next slide. This is my favourite, actually. It's a technical dream. Euro-dollar daily. You know, for some of my students, they say, "Oh, why do technicals matter? You know, how do you get confirmation? How do you get trades and enter?" This is really, really key. Obviously, we've been pretty choppy, and I'll talk a bit about whether it's dollar long later. But at the moment, 114.30 held as support on the daily and held as resistance on the daily too. So my question to you is this: which is the biggest line in the sand for bears? It's 114.30, obviously. That said, 113, the big figure, looms very large. Talk of Chinese banks buying and talk of big bids in excess of 3 yards sat down there. So just be careful. So the next couple of slides, this is Euro yen and we've got Aussie yen as well. This is really about not a dollar story, whether you should be long or short dollar. You know, as some of my LinkedIn followers know, I'm long dollar just because of the US macro picture. But in the last couple of weeks, it's whether you're long or short risk. And for me personally, I like to sell into any risk-on rallies. And you can see technically, Euro yen is pretty much broken some key levels. You know, as it rallies, it's always getting heavily sold off. Equities are looking really, really vulnerable still. And it's just about, keep an eye on yen pairs and also Swiss as well. But as you know, I have reservations on trading Swiss. Yen is the one to watch. And also, finally, dollar renminbi at 7. If that breaks, it's going to be EM carnage. And it's going to be, forget 113, the big figure on euro dollar. It will be carnage as the dollar gets bought by flows purely on risk off. Well, there you have it. Watch that risk. My name is Patrick, Adamis Principle. Thank you.